Everyone, my name is Dave Armstrong and welcome to the Market Intel podcast. I'm extremely excited today to introduce what is probably known as maybe the godfather of New Zealand investing, angel investing that is, and that is Richard Coon. Good morning, Richard. How are you?
Yeah, thanks. I promise I won't leave a horse's head on anybody's pillow if I'm going to be called a godfather.
That's all good. And so Richard, you're sort of reside. You how long have you been in New Zealand now? Because you're like myself, you're sort of valued import,
We
aren't
came
you?
out here in the early 90s.
Oh,
So,
nice.
yeah,
And
over 30 years.
I'm living from what I can tell in the background, living in the beautiful marble.
Yeah,
Sorry, I can't say
live
that
right in
word.
the Marlborough Sounds.
Yeah, nice. Probably one of the best wine regions in the world now for Sauvignon Blanc, isn't it?
Absolutely, yeah.
So yeah, so basically look, Market Intel, it's the show that brings you, I call it from the front row, and that's mainly because I used to play rugby and you never missed anything when you played prop because everything happens in the front row. And so the idea is that we interview people that have either been in business or invested in the business markets or involved in sort of the political sphere that deals with businesses. And the aim is to sort of give insights and pass on a little bit of wisdom and experience to those still in the hot seat, so to speak. So what I thought we maybe kick off with a little bit is telling us, I mean, you've done a lot of things in your journey, and do you want to maybe just give us a quick recap of, your career and what you've done in business, and then I can sort of lead into sort of the latest exit that you had, which was obviously your partner's life, which was pretty
Yeah, okay.
significant.
Yeah. Well, I guess the whole journey started 75 years ago in the UK. Went to school there. Yeah, I guess standard upbringing. Didn't quite know what I wanted to do, so I thought, well, I better just start off being an accountant, and then I'll maybe something will come to me. So I did my articles with Price Waterhouse. Um, Decided I didn't want to be an auditor for the rest of my life, and
Don't blame you.
went and worked went and worked for Xerox Corporation, based in London. Um, and whilst I was there, I persuaded them it was a good idea for them to send me to Harvard Business School to do my MBA, which was brilliant. Um, but I guess one of the ironic things about a big corporate sending me to Harvard was that one of the best courses I did there was self-assessment and career development. And From that, I worked out that I wanted to be an entrepreneur and I didn't want to go back and join a big company again. Um, However, part of the deal was I did go back for a while, but I started looking for opportunities to become an entrepreneur. And um, in the last 40 odd years, I've started and built some 10 companies. Um, Six of them have I took through to a sale. Um, Three of them failed, and one of them I still own.
Awesome.
So I guess I probably have been a serial entrepreneur, and it's been a lot of fun, I have to say. I
I've
think
I see. I think it's Otago University down in Dunedin, which is one of my favorite cities in New Zealand, obviously because of the Scottish background. But I see I think they've actually got a course or maybe a full degree in entrepreneurship now. So it's interesting, isn't it?
yeah. Yeah, I mean, I think most of the business schools, certainly, and most of the universities are doing a lot in this field. It's And particularly with working from home and the whole change to work patterns, it is quite reasonable to have a portfolio career. I think. I don't think the days where, like my father and my grandfather would, go and do a job, and that was a job or at least a career that it would be for life.
Yeah,
Nowadays, I think people do lots of different things.
it is.
Um, so, yeah, I guess with starting a business, I've always, I guess I've always been a bit of an optimist. I've always reckoned I would start, build, and sell within a 5 year period. It's great to have that
Have you
target.
have you ever done it in five
But
years?
my experience has been 8 to 12 years.
Yeah, yeah.
um, so it is a long term, path that you're going on. and it always takes longer than you expect. Um, and I've always developed very ambitious goals for any business that I've set up. There's no point setting something up that you're going to be fairly pedestrian. So that's been the plan. I've always been, whenever I've set up a business, I've always worked out what my exit's likely to be, and that's been a key part of my plan. I have never thought I'm going to run this for the next 25 years.
Yeah.
So my first business was a business called Percom, and this was in 1982, where microcomputers were really just on the market. I think the ones so Percom was basically HR software for microcomputers, and we built that up reasonably successfully to about 100 staff, and then in the early 90s we sold it to one of the major banks, NatWest, in the UK, and they were going to use it as a front end for their payroll bureau, essentially. So I wondered what to do next. I did a few things then in London, corporate finance type stuff. But at the time, my brother, Chris, had ideas to start a life assurance company in New Zealand. And I had a bit of capital, so I came out and joined him. And we built a company called Sovereign.
Oh, yes.
Which, and I was the finance director. That was a lot of fun. So I guess it took us about 8 years from start to sale. So we sold out in 98, but that was a busy year. We IPO'd it onto the New Zealand Stock Exchange in March 98. Quickly realized it wasn't great fun being a listed company in New Zealand because really you probably make it harder to raise capital rather than easier being listed. And you're in the public, eyesight all the time. So we quickly decided that this wasn't going to be a lot of fun, and that we needed to find a buyer. And it was just the time where the banks were thinking bank assurance was a great idea. And we had a couple of buyers, and the successful one was CBA.
Oh, nice.
And we sold for 238 million.
Which back then would have been quite a significant number now.
Pretty good, yeah. I mean, I think our initial shareholders got 45 times money.
Yeah.
So it was a pretty good result. And I stayed on for a while. I guess it still had things to achieve, and we did acquire Colonial, which was a fairly big group, and that took a couple of years or so. But then we started thinking, well, okay, what's our next venture going to be? And we started Seniors Money, which was, at the time, it was people had a lot of value in their homes, but were perhaps, living on the breadline. They weren't having a great life. So the idea of being able to release some equity out of your home was certainly gaining momentum. And that's what we did. We built up that business. We launched in 6 countries around the world. So I was spending a lot of my time in an aeroplane building that business. And we built it to a book of 1.3 billion.
Wow.
All funded by CBA. So I think we were probably one of their biggest customers in the world.
Yeah, you must have got a Christmas, did you?
But then the GFC hit.
That old chestnut, yep.
And at the time, 2007, I was in London putting together a listing of Seniors Money on the main London Stock Exchange. And it was all looking absolutely brilliant. And then the GFC hit, and our cost of funds went overnight from about 30 basis points over 90-day to 400.
Oh, wow.
Yes. So we had then basically a sort of a broken model. And it took about, I don't know, 3 or 4 years then of care and maintenance, getting it sorted. And we managed to sell the New Zealand and Australian business to Heartland Bank, and we sold the European business to Deutsche Bank.
Oh, cool.
So
So you still
I guess
you
we got
managed
it. We got out with our shirts, I guess, but not much more.
it. Well, that's business, and I think that's probably something, I mean, we've just gone through. Oh, I think we're still in it. I don't know what the data says at the moment, but obviously New Zealand's just gone through a pretty deep recession. I think there's been a lot of businesses that have just sort of scraped through by the skin of their teeth, and yeah,
Yeah,
it takes a lot of skill and resilience to actually survive those kind of economic shocks, doesn't it?
yeah, no, it was really tough. I mean, we had 100 staff. We had to cut it like overnight to 20, and
Wow, and
it,
that's
it's
hard.
it's a
Yeah.
it's not a great experience. I'm really a business builder, not I didn't feel great um, having to cut back. It's not really my style.
No, no, it
Uh,
sounds like you say you're usually the go big or go home style.
but it's probably good experience to have been through, because I think probably a lot of the companies around today have not been through seriously bad times.
Hmm.
We're seeing some capital shortages now, but nothing like the GFC. I
Yeah,
mean,
yeah,
that
good to
was
see.
that
So
was that was that
that
was
was pretty
pretty
horrendous,
bad.
wasn't it? Well, I
Yeah,
mean, that was once in a generation type thing, wasn't it? And I think,
yeah.
oh, I mean, there's some great movies on it as well. I think we learned a lot from that, but there's a lot of talk that a lot of the banks didn't learn from it, and the same sort of thing happening again. But yeah, we'll see. We'll see. Fingers crossed.
Anyway,
And so your
um,
sort of latest
and
one was obviously the partner's life, which again you sort of pegged back into that sort of insurance world.
yeah, I guess it was 2010, um, and we were sort of thinking, what next? And I think we'd seen the whole trend um, of bank assurance, with the banks acquiring most of the life companies, um, but it didn't sit well with them. I don't think any of them really understood life assurance, because they were more bankers. And also, over 50% of our market in New Zealand is with the product is sold, or life products are sold through brokers. And, you know, again, the banks don't work comfortably with brokers. Um, so the the and a lot of the brokers were feeling unloved. They didn't
Hmm.
feel comfortable working with a bank that naturally wants to be closer to the customer than the broker would like them to be. So we thought time is right to build Sovereign Mark II, and that was really what we looked to do. There was a bit of an issue in 2010, because there was a new law coming in through called EPSA, which was all about regulation of life assurance companies. Um, and we could see that if we didn't become a registered life company before the bill got royal assent as an act, which was in September, that there was a 3 year adjustment period um, during. But if you didn't actually start off by being a life company when the act came in, you probably couldn't do it then for 3 years.
Right.
Um, so that's what we did. We worked out the law said to be a life company you have to have policyholders. Didn't say how many.
Hmm.
So we quickly designed a funeral plan and signed up 2 customers.
Oh, there you go.
And that made us an existing life company under the legislation, and we were able to then come through, and from then on, um, we we had some issues because obviously with a new regulator, with the Reserve Bank, they weren't altogether um, understanding of life assurance. Their background was more in banking. They certainly didn't understand the use of financial reassurance. So there was quite a, a fraught period where we had to get them acquainted with what we were doing, and get them comfortable with us. But I guess we got there in the end. Um, and I say, with Partners Life, we like all my other businesses, set a very clear target that we were going to build a business worth 500 million within 5 years. Um, and but and various other things. We were going to be the best. I think in any business you go into, you've really got to target to be the best.
Hmm.
So otherwise, it's bloody hard to sell if someone is better than you.
Yeah, well, that's a good
Um,
point, actually. That's yeah, it's an interesting analogy. Yep.
and lots of innovation. I think in any business I've been involved in, we've always been looking for trying to be different.
Yeah.
So that it makes life a lot easier rather than being me too. So we did very successfully built up um, Partners Life. It obviously took a lot longer than 5 years. I think it was more like 12 years. But in 2022, we sold it to Daiichi for 1.06 billion,
Nice. And
which
that'd be
was
there's not many New Zealand companies that actually I've seen a few that have been valued in that kind of space where they've raised capital and all this kind of stuff, but from the actual, exiting and getting a check and money in the bank, there's not too many that have actually hit that $1 billion mark. So that's
no,
quite an
no.
achievement, really.
uh, yeah. So that was, I guess that's um, sort of, and I'm not going to talk through the three businesses I set up and failed, but you do learn a lot from failures as well as successes. I think the important thing with failures is to fail quickly.
Yeah.
It's quite common to get it wrong.
Hmm.
You think there's a great market, it isn't so great when you get there. The important thing is to not keep plugging away if
If it's
it's
a dead duck.
not the
Yeah.
right market to be, just get out and start something else.
Yeah.
Um,
With your shirt on your back, hopefully. And so one of your passions, and I guess this is why I sort of referred to you as jokingly as the godfather of New Zealand and angel investing, is that I think from memory, you're one of the New Zealand's archangels. Is that correct? Is that sort of the
yes,
one of
yeah,
the sort
yeah.
of one of the sort of titles that gets bestowed
Yeah,
upon?
it wasn't the Arch. I think it was an award for um, best. Best. It was both myself and Hector Group
Mhm.
together for, I think, being best investor director.
And so like AIM, so Angel Investors Marlborough, which has now become one of the most active and best angel groups in the country, that's kind of been a bit of a passion project for yourself. And I guess what is it makes you so passionate about? I mean, because you've obviously had lots of success and you've done lots of things, but going through doing this and setting up AIM and what you've been doing in this sort of world, you obviously clearly sort of passionate about it, want to give back a little bit, and just keen to understand, where does that sort of passion stem?
Yeah, yeah. Well, I guess after Partners and having moved down to the Sounds, I sort of thought, look, I'm not about to start another company and go full time into it, but I just sort of felt that um, I'd like to put some of my portfolio into private equity like this, and it's a lot of fun working with young entrepreneurs. Mind you, at my age, everybody seems young, but to work with younger people and help them fulfill their dreams, and to be able to share some of the experience and skills that I've built up over the years. So that was really what got me involved in AIM, and we founded AIM back in August 2017. So yeah, about 7 years ago. Um, and it's been remarkable. I mean, we've now got 180 members, um, and we've invested just under 30 million into 73 companies.
Nice.
So it's and there's no shortage of great opportunities in New Zealand. I think at any point in time, we're probably looking at 20 or 30 deals. And I would estimate we probably invest in about 10%
Hmm. Which is
of
probably
what
quite
of
high, to
what
be
we
honest.
do.
Yeah, there's
That's quite high. I mean,
yeah.
VCs tell you 1%, which is probably, how they are obviously a lot more selective
Yeah, the sort of
And
yeah,
they are investing other people's money,
yeah,
which is different to groups that are investing their own money and can, they don't, they know they're going to make some mistakes, but with a VC, making a few mistakes can prevent them raising the next fund.
yeah. That's
So,
it. There's
so
a lot more structure, and like you say, there's usually bigger checks as well, so it's bigger
oh
losses.
yeah,
Yeah.
yes, that's right. Um,
And so,
so
I mean,
and
that folds in quite nicely to the sort of next question I was going to ask is, I mean, you've talked about, what you look for when you're building your own businesses, and says you sort of, obviously, you talked about having a portfolio and investing into different things, and sort of when it comes to that sort of private equity, venture capital, whatever you want to call it, like you personally, I guess, and sort of some of the investors that are a name that you've sort of gone on the journey with, what are you sort of looking for, I guess? Like, what is it that really piques your interest and go, this is the right one to back?
well, I guess from my own experience with businesses and you put your plans together, they never turn out how
No.
you plan.
Yeah, yeah. I used to joke,
Um,
I've never seen a bad forecast.
and the key is you're investing in people,
Mhm.
and you're really saying, have they got the skills? Have they got the hunger? Are they going to be able to successfully build a business? Are they going to be able to take the stress inevitably they're going to go through?
Yes.
And, and when they find their business plan is wrong and the world is different to what they expect, are they going to be able to pivot fairly quickly to
Yeah.
something that will be successful? So um, the key focus of what we're doing is, are we backing the right people? And that's why we've sort of designed our pitch nights where aspiring entrepreneurs come and visit us and present to us. Um, we make sure then that they stay for an hour or two and join us for dinner. Anybody who's interested in chatting with them does so, and you learn so much more just by sitting down and sharing a sandwich with somebody,
Yeah.
than you do from listening to a prepared presentation.
Yeah.
So that's our first and foremost is is it the right people? Do we think they're going to succeed? Um, and it's quite good because a lot of our members are themselves past or present entrepreneurs. So I guess they've got a reasonable feel for what it takes and can judge whether or not the company we're looking at, the team is right.
So
Um,
with any of your past,
that's sort of, yeah, that's the
oh,
main thing.
so with any of your past businesses, I mean, it sounds like they're very financial market focused, and there's probably, like you say, you had funding lines with CBA and stuff. But did you ever have to go through the whole world of pitching to VCs and private investors to get equity in the door, or did you sort of been able to bootstrap it and fund it through other means?
No, no, no. I think at Partners, I can't remember that we started off thinking that we needed 10 million. Yeah, we started off by saying, well, we think we're going to write 5 million of new business in our first year, and we'll build gently from there. Um, and so we worked out we needed 10 million of capital. We put together our 10 million of capital. And then in our first year, we did 23 million of new
Oh,
business, which was like 5 times what we expected. And we suddenly needed huge amounts more capital that we hadn't planned for. So most of my role as finance director was going out there with the begging bowl.
yeah.
And I had to raise money pretty well every year.
Wow.
Um,
Yeah.
so yeah,
So
not
it's
not easy.
no, and
Yeah, there's other things you can use, which is reassurance financing, and we did use a big chunk of that. Um, but inevitably, and particularly with the Reserve Bank then and the new regulations, you really had to have a pretty strong capital base. You couldn't get by with just reassurance financing.
yeah. And so some of the opportunities coming through AIM and stuff, and what you probably see for your own desk, where do you think New Zealand's strength is lying in at the moment? Any particular industry that you're seeing a trend in that we're really good at, or something that we should be sort of, AI is the big chat overseas, right? And there's lots and lots of money getting plowed into AI at the moment. And I guess, should
Yeah,
New Zealand go
yeah. I
down
mean,
that path or?
uh, Yeah, New Zealand is a very kind market. No, it's relatively simple to build a business in New Zealand and succeed in New Zealand. You don't have cutthroat competition so much.
Hmm.
And people generally are supportive and helpful and want to see, it's the old number 8 wire and all that. They want to see that, and they like to see people succeed. Um, but it's very, very different world when you go from New Zealand and try to scale up overseas. Um, and I guess when we're investing, we really, if we want to get a good return, we've got to invest in a business that is going to scale overseas successfully.
Yeah.
So that's really whatever industry they're in. It's can they take this to other markets, um, and the product's got to be right. There's a whole set of skills, um, and we've been through it now with a number of companies. Um,
Have there been a few exits through AIM?
yes, yeah, we've had three or four exits now.
Nice.
Yeah, um, I think we've invested some 30 million, and I think we've had about 7 million back from exits.
Nice.
And I think um, the rest of the portfolio now is about 46 million valuation. So that sort of works out about twice overall, about twice money. But a lot of those we haven't been in for a long time, and it's a bit
Yeah.
early to
Yeah,
say.
early stage
We
stuff.
sort of have this philosophy, which is we would like to see 5 times money over a 5-year period.
Gotcha. And,
Um,
and that'd be through
I think the
revaluation.
yeah, and we because the and often with these young companies, you can easily go in and double the value within 12 months. They will, it gets harder to keep doubling as you
Yeah, yeah.
get more valuable. But certainly in the early years, you can get a good return. Um, and I think the thing about angel investors is they don't have deep pockets.
Hmm.
We can't just go and raise another fund. So they need to be able to recycle their capital.
Yep.
And therefore we're not really looking for something where we're going to be there on the cap table 15 years later. We want to ideally get out sooner and then reapply our capital.
Hmm.
So uh, and that has sort of forced us to look at what are the other ways of getting some early liquidity for private investors. And one of the things we've been involved with, which I know the guys as well, is Catalyst,
Yeah.
because we do see that it's important for SMEs in New Zealand to have some liquidity in their stock.
Hmm.
And that's also important for us as angels to see that. And that's one of the key things we're looking for.
I think there's also an opportunity in New Zealand. I've noticed over the last 12 months, particularly, I've done a lot of sort of like bridging rounds for early stage investors where, they don't want to be in for the long time, but they're willing to take some of that level of risk up front. And it might be a bridging round prior to the equity round, or it might be, just to sort
Mm,
of do some working capital into the business. And, we've done a couple of structures where, you get the fixed return, obviously, because it's a debt product, but then there's, convertible note type options, there's, warrant type options, there's a whole bunch of different ways that you can do it. And I think personally, I think there's a bit of an opportunity there because there's a lot of businesses that come to me, and it might be because of what I do for a living, but sometimes it's just purely to fund that 6 months of runway that's needed until that check for 2 million bucks comes in from someone. And is that something from an angel's perspective? I guess would that be something that would be appealing? Do you think?
oh yeah, I'm doing a reasonable amount of loans, um, and you know some convertibilities is good, perhaps some sort of enhanced rate under certain conditions.
Yeah.
You just try to be flexible and come up with something that's fit for purpose.
Yeah. Yep.
And yeah,
And so
Absolutely.
moving on to the last part, I always ask, what some of the biggest mistakes you've made, and we've sort of touched a little bit on that about how, you're not always going to succeed, and it's about pivoting and adapting. But instead, I thought maybe we'll focus a little bit on, you're saying obviously it takes a lot of skill and, ability to scale overseas, and that's kind of like where New Zealand businesses that want to go big and get a good return have to kind of look at because, population of 5 million people at the bottom of the world, we're a little bit limited to how many boxes of cornflakes we can sell. So from your previous experience in scaling your own businesses and the ones that you've invested in, what are those key things you need to look at when you want to expand overseas?
Uh, well, with both our life companies, we didn't go anywhere other
Well,
than New
yeah,
Zealand. So, and that worked. That was a market where you didn't need to go overseas. But groups like Hector, we they're in orchard management systems. One of our major customers in the US is the size of the whole New Zealand horticultural market.
that's it. We
Um,
forget how small we
so
are.
that is an industry where you have to go to the US and um, probably other Europe and South America. I mean, those are really the key markets for horticulture. So you need to know that you're going there. And the key is to get some really good local people. Because you can't do it. You can't build an international market out of a suitcase. You
No.
can't just keep going in yourself and flying in. And the market themselves want to see a local presence.
Yeah.
They want to know that you're committed and you've got people on the ground and someone local they can call if they've got an issue.
Yeah. Boots on
So
the ground. Yeah.
yeah, yeah. The other thing I guess we found was that there's quite a few New Zealand companies that have already trodden this path, and they're incredibly helpful. So, I would advise anybody who's sort of perhaps going into the States is go and talk to some of the other Kiwi companies that have gone to the States. They'll be very, very happy to share their experience with you, and it's invaluable.
Yeah, and there's a few programs with through NZT doing that stuff, and I don't think it's around anymore, but there used to be a
Yeah,
program called
Beachhead
Kiwi.
program from NZTE, they're really good. They're really
Yeah.
good and have some very knowledgeable staff in the markets. We always use them to help us.
And so,
So
any thoughts of
definitely.
slowing down, or are you are you still enjoying it?
Um, Yeah, yeah. I mean, I have now stepped down from the chair of AIM, so I'm really much more focused on sort of my own portfolio. But I have a someone who helps me manage the with. I think I've invested in something like 100 companies now, so
Yeah.
it's pretty full on just managing that.
Yeah.
Um, and so that's yeah, I don't think I'm going to be just sitting in a chair anytime soon. Um, but I enjoy it. It's good fun. But I'm probably getting to the stage where I do like to do other things in life, and so I'm certainly not working as hard as I did in the earlier years.
Oh, well, quite rightly. So, I mean, if I was saying, especially if I was living in Marlborough Sounds, I'd probably be out in the boat trying to get some, what's it, snapper or something, probably, or
Oh
something.
yeah, no,
Yeah.
it's an ideal spot for that. And yeah, I love my sailing, and I play bridge a couple of times a week, and I'm always doing lots of other things. And we got the grandkids, so I've got to pick them up from school today. And
Oh, nice.
yeah, so yeah, just getting that balance right. But I still want to, until they carry me out in a box, I really still want to be involved
Yeah.
in working with small companies. It's just such great fun, and it's always exciting. You never quite know what's going to happen next.
Oh, fantastic. Look, thank you so much for your time, Richard. Just to sort of summarize what you were sort of saying there, obviously, it's if you're going to build a company, there's no point being, I like that phrase, no point being pedestrian. It's sort of, you've got to go big or go home, otherwise it's not
Mm,
really worth
yeah,
it. Resilience and being able to pivot in a hard market, which I think a lot of people have learned over the last 12 to 24 months. Investing in people, it's actually something what my old mentors used to tell me is we don't back businesses, we back people in business, which is a great
yeah,
phrase.
Yeah,
And then finally, like you say, the key for expanding overseas is it's all about the people and having the right people on the ground and believing in the dream of what you're trying to achieve.
absolutely. Yeah.
So no, fantastic. Looks, thank you so much for your time. I'll hopefully maybe you can go and do some sailing now.
If it stops raining.
That's all good. Now, thank you very much, Richard. And obviously, if anyone's interested in reaching out to AIM, just apply via the website, essentially, isn't it? And
Yeah, yeah, they
hoping for
should. Yeah, and we're a very friendly bunch. Love to talk
yes,
to
yes. No,
people
I've
who
been
are
up there
interested.
myself, and yeah, no, it's a great crowd to go and talk to, and like say have a sandwich and a beer with afterwards.
Absolutely.
No, perfect. Thank you very much, and let you get on the rest of your day.
Okay, thanks, Dave.